How are you looking at, Jesper, broadly speaking, if we were to broaden out 40,000 feet, a lot of U.S. investors going out of China and moving into Japan. What does that mean for, play the trend if it's your friend?
But look, and this is, the only thing that worries me about the Japanese market, and I'm very bullish. I really think, in the retail seminars that we give here in Tokyo, I basically say that, look, it's not weird, to forecast that the Nikkei will be at 50,000, 50,500 in a couple of years' time, just simply because, the domestic momentum, the industrial consolidation, the metabolism of corporations is there. So ironically, the only thing that worries me is not the fundamentals, but it is this fact that everybody is bullish Japan now.
But Jesper, can I ask you, because you just mentioned retail seminars, and we keep getting this, NISA data that suggests that they're buying foreign companies. They're not buying Japanese companies. When does that flip on its head? When do the domestic side start buying Japanese companies?
So this is where exactly the key point is, because, it's ultimately Japan is one of the world's largest creditor countries. Mr. and Mrs. Watanabe actually recognizing that the domestic market, that's where the value is. It isn't happening right now. You mentioned the NISA inflows, these new stock investment schemes that have been put into place since January. About 85% of the money goes outside of Japan. Only 15 to 20% stay inside of Japan. But still, I think that, the value proposition is here. As it becomes clear that there's actually a growth component to the Japanese market with the new generation of CEOs investing, in new factories, consolidating the industries, not afraid to engage in mergers, that's where the Japan story is going to bear fruit.
And very quickly, Jesper, this 50,000 target on the Nikkei, when do you see that being achieved?
I think it's like, Nini, go, go, go. So 25,000 55,000 in 25.
Super. Wow. Wish we had more time to dig into that.
Not that bizarre. All that you need is about, 35% earnings growth over 2 years, which is perfectly possible, and, a little bit of multiple expansion, 35% earnings growth from, the top 50 companies in Japan. That's very possible. And the one thing that's going to give you a kicker is that the Japanese financials are going to get a big boost because of the rising real estate values that we get here in Tokyo.